What is going on YouTube? Happy Tuesday, market makers. It's Brendan, once again your host for this evening. Yesterday I put out my Tesla deep dive video. A lot of you enjoyed it. That is some deeper TA on Tesla. If you haven't watched it, if you're interested, definitely check it out. Guys, a lot of requests about the GAN fan. I have a video out there on YouTube already on my channel. You can find it. WD GAN is on the thumbnail. I'm going to link it right below in the video description for those of you that are having a problem finding it. So check that out if you want to see how to properly lay out a GAN fan, because it's all about the 45 angle. All right, guys. So let's talk about the markets, because the markets are red today. Bitcoin's flat. And we're going to click through the TA. We're going to look at some Forex, some commodities, obviously Bitcoin, and I got Tesla on here as a permanent stay, and the indices as well. But first, we need to talk about the dollar and what I think is going to happen. Remember, I went back to 2015, okay, on the dollar. Put this thing in YCall for you. Went over this last video, so I'm not going to spend any time walking you through it. But the key retracement levels, again, properly laying out your fib is really important, because we bounced right off the 382 at 104 spot 487. Strong up bar, right? Strong up bar. And again, remember in the Wyckoff principle, after making these up thrusts, signs of weakness, down thrust, signs of strength, what we're doing, we made our double bottom, our spring. I do think my thesis here is the dollar's going to gain strength once again, come back up, and eventually crater the markets. And this is a lot because, Powell, the market perceived those comments as dovish. And because they perceived it as dovish, the dollar sold off. The dollar's the US dollar. The DXY is the US dollar against a basket of currencies. I think something like 38% of that basket is euros. So this affects a lot of different things. But I think you're going to see a lot more strength in the dollar, especially as the Fed has to keep raising rates. Wage inflation went up 5.1%. It's been accelerating the last 3 months. This is the key metric. Unemployment stayed at 3.7%. Powell wants to see unemployment up, right? They won't say this, but he's basically said the job market has to cool off. What does that mean? Unemployment has to go up, okay? Wage inflation has to come down. That is the sticky part of inflation, is the wage inflation. Good prices are going to fluctuate, come up and down, but the sticky part is the wage inflation. So as perverse as it sounds, because it is perverse, right? Because you want to make more money to catch up to inflation, the Fed doesn't care. That's all the Fed can do. The federal government is the problem with spending more money, running $31 trillion deficits. That's a huge problem. But let's look at this on the DXY. So laying out your fib is always key, guys. I went into some deep dive fib TA about fib waves, waveform trading with Fibonacci. Very key. Look where you hit the 1618, 104 spot 163, almost to the penny, literally. This went to 104 spot 113, 104 spot 163. So barely touched through it. Got above your 200, and you're stuck between your 200, 233 here, okay? If you break back up above this, which remember the CPI comes out the 13th. Now, I went out and said I thought it was going to be hotter last time based on the fact that, 14 of the last 16 prints came out hotter than expected. I don't know what it's going to be, guys. It could be the same. It could be slightly lower. What I do know, we're going to look at that when we get to the markets after Bitcoin. But if that CPI number, that inflation number comes in lower, you got to remember, think like an NPC. The NPCs that you see on CNBC, it's a lot of acronyms. The ones that you see on CNBC, lower inflation. See, inflation's coming down. Rally, rally, rally. So that could be our year-end rally. Now, my theory has been, as you guys know, because these markets all made tops and they're all pulling back down, we can have that rally, but it's going to be from a lower position, okay? So your Santa Claus rally may end up just taking you back to the tops you already made, but we'll get to that. But that's what I'm thinking, and then Powell comes out the 14th. Now, I do think the 75 basis points is back on the table. I'm not saying Powell's going to do that, but I do think it's back on the table because of this jobs report. Again, 263,000 jobs versus the projected 200,000 jobs. Job market's still heating up. GDP is still climbing. All that has to come down, guys. And you're going to see all that start to really kick in. Q4 earnings, you're seeing more and more layoffs, and then Q1 earnings, which brings you right to March, April. And March, the 45-degree angle on the the Gann calendar. You get market crashes and market bottoms in March and September, more than any other 2 months to 245 angles. So that's setting up nicely. So we're going to be trading this in and out along the way. And of course, a lot of our trades already hit. If you guys know, if you were watching this and we were trading the indices, if you took that GBP trade, Binance Worldwide, I'm talking to you, that GBP trade hit. I hope you took it. So we covered that last time. Guys, by the way, check out our Discord if you want to come trade with a great community, get some TA, get education, fantastic people there. The link is in the video description. Download Discord, click our link. It's $20 to try out the month. The month is almost over. You get 30 days membership for $20. So come check it out because we have more and more people. Over 120 people now have come using that link. Lots of new faces in there. Really happy to see everybody is enjoying the room. I think you're going to be surprised versus the other offerings in this space. It is realistic people, not a bunch of moon boys, and we're all trying to profit from trading and education. Guys, this video as well is going to be brought to you by our two sponsors, BITGET for all the cryptos, link in the video description, and SimpleFX. I'm the only person sponsored by SimpleFX on YouTube. Check them out to trade the equities, commodities, and Forex. Small handful of cryptos, special double bonus with our link. And guys, a lot of people ask me, I've been having people send me, a couple of dollars here and there on YouTube with the gift thing. I don't know what it is, the thank you button or whatever. I would rather you just join the room or use one of our platforms because that supports this channel, because YouTube doesn't pay you anything. Unless you're Joe Rogan, I think I'm making $5 a video from ads, okay? $5 a video. So, I really would appreciate if you'd support the channel by liking, subscribing, and checking out our sponsors or our Discord. All right. So DXY on the daily, again, laying out your fib properly. We'll see if this comes back up. Obviously, it's in a clear downtrend, and I think it will when Powell sticks in that rate hike. If Powell gives a hawkish speech, which I think he has to now since he effed up the last speech, if he gives a hawkish speech on December 14th, I think initially the Fed wanted to do 50 and then maybe 25. I think the Fed, if they don't do 75, they're going to do 50-50. So, and I think he's going to reference something like that, and it's going to scare the markets. Markets may still rally, but the dollar should gain strength, okay, off of what Powell says. So we shall see when that time comes. It's still a week away for the CPI. Let's go ahead and look at Bitcoin on the weekly. Extremely boring, but again, fib waves, guys, looking at your wave projections for how we're going to lay this out, looking at what Bitcoin's doing here. And if you just go ahead and throw a fib retracement, you can see you're landing right at the 1618 at 16,071. Price is moving up, so we're going to have to drill down like we always do into the daily. Now, a lot of you were really commenting how much you enjoyed the fib waveform trading that I kind of highlighted in that Tesla video. And that's the key thing, guys, is measuring your waves, looking where your 1618 will be activated at, okay? I'm looking at key structures in the market, such as maybe a double top that breaks, just as an example, because this comes into play. We can go ahead and take a waveform trade off of this, and then look where your 1618 hit. You can see your one fib, look at that, used as support beautifully. 1618 hit, 1618 hit, and then used as support even on this big dump candle you got back above on the body, okay? So you see this over and over again, tracking the golden ratio 1618 phi. And you can see this here as well. Let's just go ahead and get rid of this. I'll show you a couple more examples off the base of this double top here in the midpoint. You can see your 1618 also coming into play here, being hit as a target, obviously. Actually, I would put this right here because of that candle. And then you can see this right here being hit at the 1618 at 20,808. Again, part of waveform trading. Remember, this is a subjective part of understanding fibs. If you always just go to extremes, you miss all of these movements here in the marketplace. Look at this, okay? This lines up beautifully here. Over and over again, understanding where proportionally the market is either expanding or contracting is very important when you're looking at trading. And you can see this, as a matter of fact, for where you are. How could you have seen where you fell to? Well, we can go ahead and pull the 1618, the golden ratio, 15,855. Look at this. Look how many times you wick this, you pump back up off of that number, okay? Use it as resistance at the one fib at 18,505. You'll see this proportionally all in the marketplace. And again, if you want to just see where is this price finding support right here, how is it elevated like that above here? Well, we can take another waveform and do this with the 1618 and look where you're at, 16,884. Okay, so 16,884. What this is telling me, if you lose 16,884 of any type of conviction, you're back down in this trading range. Right now you're holding that. Okay, you're holding that. Bitcoin's holding strong while the markets are selling off a little bit. So we'll see how long this can stay in place. And if we look at this here, let's look at our indicators. MFI, not really any type of divergence to speak of. Very low volume momentum. Looking at volatility, if you guys are familiar with the ATR, I'm kind of testing out a couple of different things here. Might be releasing another indicator soon dealing with volatility, but looking at the ATR as well, and that is basically just midline flat. So nothing exciting here. This may take some time to form, guys, to get some type of big swing trade off of this, like this 28% drop that I gave you. Let's go ahead and look at Bitcoin on the 8-hour. Tighter waveform projection. You can see how beautifully the 1618 Phi is giving you 17,312. And of course, your 8-hour 200 233 is up here at 18,5. We had that bearish, okay? We had bearish, what's called bearish divergence here on the MFI. And actually, I posted a what turned out to be a really nice scalp trade right here at 17,312. And we got a retracement all the way down to 16,856. I trade Bitcoin at 50x leverage. A lot of people ask me what I traded at 50x leverage, and I capped out at 100% on my money. Just in that one afternoon, guys. That's just simple like that when you can just trade crypto. This is why people come to crypto that's why I came to crypto as traders. Remember, as a whole, equities like the S&P averages about 10% a year, okay? 10% a year. You're getting big movements, just a few percent with leverage, and you can make a lot of money trading some high probability trades if you understand fibs and waveform trading. Let's look back on the daily, because your 200, I'm going to keep track of this, is at 21,250 now, and your 233 is up there closer to 24K. So this is going to keep descending, guys, and at some point we're going to run into that, and that, as you guys know, in a primary downtrend market is going to be a key area to watch. The 4-hour is giving us more action. My 764, my fib mirror is at 17,319 here, the way I have this laid out, and the 200 has descended to it, the 233 slightly above it. Bitcoin's hovering the 618 at 16,966, and I want to see if we can come up here, because as you guys know, this has provided excellent trades in a downtrending market. But if the market decides to turn and rally based on what Powell says, or rally based off that CPI coming out in a week, then you want to watch this, because you can pump above it, and you got to start scaling up in your time frames, looking at your 200 233 on the 8-hour, looking at your 200 on the daily, okay? Because one of these is going to give you an excellent opportunity to take a nice short in this primary downtrend market. Looking at the S&P is unable to defeat this simple trend line. Sometimes trading is just really simple when it comes to TA. Weekly 50 is still above you. I would imagine, like I've said previously, if we were going to get some type of rally based off a low CPI, then that's kind of your cap, and that cap right now is roughly 41.17. This will be descending as well. You can see the S&P sold off today, okay? I'll show you this on the daily time frame. Trend line intact, guys. You're not able to defeat this trend line. If you did pop up, I think it'll be briefly, and then you'll be coming right back down. Your 200 is down below you. 3600 area, 3650. Let's look at this on the daily, because key thing in TA, you lost your 200, you lost your 233, which is laying right at 4033, right at your 618 as well. Okay, so again, the markets can have their rally. You've already had a nice move up. Remember, the S&P is symbolic of the broader market. If we take this from the base up to the peak, you went up 17%. Technically, just by basis of percentage, you're not even in a bear market anymore, okay? By basis of percentage. But, you know, you are clearly in a primary downtrend market, which I would call a bear market. You have a strong bear market rally happening here. But, you know, looking at this from a Wyckoff perspective as well, because you exited Wyckoff here, you had your Livermore pivot, but you're just making another trading range. This is all you're doing here if you start putting this in Wyckoff, a mini Koff structure, okay? This is all you have going on here And so you want to try to hold this area, see if you can rally back up. But again, that rally is going to be capped somewhere in this quadrant if you do rally back up with the low. Now, conversely, you have a hot CPI, this thing's just coming back down to the lows. That's all that's happening, okay? You're coming back down to the lows, could even lose the lows, but you'll be coming back down because that is negative news. If you have a hot CPI with the wage inflation that we have, with the job increases, the market's going to be really upset by that. And if you can see what you printed here is a disjointed double top, right? That's what you printed here overall. So you're kind of just below the neckline, and if this thing it breaks, you want to look for your bounce, maybe off the 50 at 38.33 if it does pull down some more. And let's look at our momentum and everything. Still, we have bearish divergence overall for the rally, okay? But the price action here isn't necessarily divergent at this point, but you have bearish divergence overall for the rally, losing less participation today, more or less. Even less you lost more participants in the marketplace today. This is just trending extremely negative. So your volume momentum, okay, your rate of change in volume. So it's just trending extremely negative. Now looking at my ATR here, you're basically at the flat line, and we'll see if this thing spikes up or spikes down one way or the other. And let's go ahead and look through this. Okay, we got Russell on the weekly. The Russell has just been providing awesome trades. Lots of people are finding success trading Russell. People ask me all the time, why don't you talk about your trades on the S&P or the NASDAQ? I don't trade them that often. I'll trade the NASDAQ when it hits key resistance, but the Russell right now is trading at a roughly, last time I looked, I think it was about a week ago, it was about a 70, 71 PE. Okay, the S&P's at, I don't know what it's at now, I think it's at 18, maybe 18 times. So the Russell is trading at a premium, like a meme indice. Okay, so that means it has a lot more volatility and a lot more movement, and you can see that in the Russell candles. We got rejected cleanly at the 50. We shorted up here. I even talked about it, shared that trade with you guys as well. And of course, where we fell from, put off the trade post at, what was it, 1880 I said, to 1900, 1908, whatever that peak was. You're down here at 1811 right now, and you hit 1804, 1803. You're almost at your daily 50. You lost your 200, okay? So again, the Russell as well as in Wyckoff could be a down thrust. If we do get our rally, if we hold this range, just put candles up here, you might just be coming back into this range, get a couple up thrusts, maybe even make a shape like a double top and come back down. Look at the volume on the Russell. Not only is it below average, it's very much below average, okay? So you're just trending sideways. There's billions of dollars coming out of equities now. They're coming out of the ETFs. There's these things are tracked. They've been reporting it on the news as well. I think last week was a huge outflow. We'll see what happens this week, but lots of money coming out of equities. Lots of smart money, okay? Big money, smart money, understands the reality of the recession coming next year. Now, Bank of America, Brian Moynihan still hasn't caught on to that. He doesn't think there's a recession. A couple of the big banks still don't think there's any recession. Then you have Jamie Dimon. Financial hurricane is coming. I'm in the financial hurricane camp. Been there for over a year, as you guys know, watching this channel, because all the market statistics support that. Inverted yield curve, 3-month 10-year, the worst it's ever been since 2007 and the Y2K crash. 9 times inflation above 9%, 9 times you have a recession since World War II. So all the markets, the indicators, leading indicators are also telling us we're going to have that recession, guys. So lots of people keep commenting about, I'm the only reason they've been holding back on FOMOing in the Bitcoin, DCAing. Not financial advice, always say that, but what I'm doing, I would never DCA into anything before a recession. Remember, we have market metrics on this. The S&P on an average recession goes down 35%. Let's just see what it's down really quickly. It goes down 35%. Okay, so let's just take this from the all-time high, the big bubble cycle that we're in. We went down 27%, and now we're down 18%, 18.66. So at a minimum, you're doubling your losses at a minimum, okay? That's just if it's an average recession. You factor in the $6 trillion printed in 30 months. You factor in these massive bubbles that we've created in the housing market and the equities market. Guys, it's going down, I think, at least the same level that it did in .com, the same level it did in 73, the same level it did in the GFC, the Great Financial Crisis, which averages out to over 50%. GFC, I believe, was 57%, but you're looking at a minimum of a 50% decline. Again, more than twice the losses of what the S&P is at now. So just keep that in mind. Bitcoin's hovering around 17K. The S&P, when you're talking about the S&P doubling its losses, you're talking about trillions of dollars. The whole market cap of crypto is something like 650 billion right now, okay? You're talking about trillions of dollars. So I would just be patient, my friends. Be very patient. There will be much better prices, and you guys will understand those prices and what I'm looking at when that time comes. Bearish divergence still in the MFI. Again, low volume, negative losing participants in the Russell. Look at this. It's just getting stronger and stronger. This is less people. Remember, this is Bob Sixpack, Joe Sixpack, and Jack and Jill not willing to pay higher prices for stocks, starting to second guess themselves. More and more Americans, not the people on TV, but average Americans, are expecting some type of crisis in the housing market and the financial market. We're racking up record debt. We had record credit card debt added, I think, the last month or the last couple of months. So just understand the environment around you. Let's go ahead and look at Tesla. Tesla video, guys, we talked about this on the weekly, hovering right at the 233, right here at the 200 as well. Key level of support was that 182 area. We got 179. Let's look at Tesla on the daily. Again, just go ahead and grab a fib wave here to go ahead and get your support level. Looking here at the 618 at 178. And you have the one fib at 166. Now, when we go ahead and back this thing up, just like we did in the video, take a larger fib wave projection here from higher up, you get this reversion trade that we've been talking about here on Tesla, right? Tapping this at 176 at the 1618, bouncing back up to the 198 at the 1 fib. There's your reversion. There's your reversion again. And then what I tell you guys from the last video, right? We didn't come down here yet. I said, watch this to come down to the 1618 at 176. You're in a very key range here between 198 and 176. And again, that's complemented by understanding the 233 and 200 are right beneath you. Okay. Very key area. You lose that, you start hitting your head, downtrend could be hardcore from that point on, and that will happen when the markets truly do flip, guys. So no, I'm not buying or accumulating Tesla here. Again, my Tesla price target, as you guys know from watching that Tesla video, is quite simply going to look like this. Where am I buying Tesla? When we get towards my static target of the FI of $38.85. And that's going to take decline, and that's going to be around the time the market looks for a bottom. And this is the static target. As we get more candles, see more news events unfold, see how the economy reacts, maybe this is $10 higher. I think most likely, if anything, it could be lower, okay? But this is our static target that we're looking at, and that's when I'll get more excited when we start getting down to that level. And by the way, if you want to trade that, definitely trade it on SimpleFX if you guys want to short or long any of your favorite equities. Euro dollar, been talking about this, hit the weekly 50. And euro dollar is descending as the DXY pump. So this nice parabolic bottom here. But, you know, I think, again, this is going to be capped, especially as the dollar continues to gain strength. If it continues to gain strength, looking at this from a white cost perspective, you are on top of your 200 here. If you come back up, remember, you want to try to make your Livermore pivot. Come back up and break out. But if Powell raises rates and gives a hawkish speech, I don't think you're breaking out here, okay? But you may come back up and make a double top, which would be another opportunity to potentially short that. And if we look at the GBP threw our VWAP on here as well, nailed the VWAP, nailed the fib perfectly, the 0.5, 123, one spot 23050, as you can see right here. And we got a nice down move here on the euro dollar. What was this rate here? Let's just look at our pips, what we got, because this was a beautiful hit on the fib. And this is just about 220, 230 pips right now. So really nice trade. Hope you got that one, Binance. And let's look at that. That's the weekly. On the daily time frame, you zoomed in here, you can see the 0.5 fib. Look at that hit, okay? And again, you just lost your 200, lost your 233, and Great Britain has higher inflation than the U.S., and they're in a worse situation than the U.S. You do have your 50 curling up here, which would be bullish if you get across. So again, you want to see where this finds support, because if you come back up and hit this again for a double top, excellent potential shorting opportunity with understanding the DXY is going up in confluence if it decides to do that, which I think it will after that Fed meeting, okay? So that's what you want to watch for here. And this could just keep losing strength if the dollar just decides to rise before the Fed meeting, which is doing currently, as you guys know. Looking at gold, guys, that gold fib I laid out, how spot on was that gold fib, right? We did it live, looking at the charts here on our last video. 1802. Look where gold got to. Gold got to 1810. Look at these hits on the 1618, right? Threw that fib up here while we were just breaking out down here, and this is where you got to, guys. Again, looking for gold to maybe come back up for a double top or a retest, or it could just lose. Now, this is that long-term accumulation box that we were in, and we fell below it, okay? So you just back tested it. So we want to see how this plays out on gold. Gold is trading at 1771 spot 330. Let's look at silver. Silver, also beautiful fib layout that we did last video, guys. Look at the 618 23 spot 13, and look where you found your resistance. You spiraled up here, got your double bottom, and now you retraced off that. Again, it's all going to be about what the dollar does. And what I really like is how the MFI respected this trend line. Look at this. Remember I threw this down? I told you this is like a megaphone pattern. Hit the trend line. Looks like we might be coming back down again. If that plays out again, because the metals are following the equities, which is absolutely bonkers to a lot of people that are big gold bulls or metal bulls in general. But they did this in '08, guys. Gold went down 34%. When the market tanks, metals will tank. Now, metals will have a cycle where they will not tank as much, and they will go up a lot as the DXY, the dollar, gets devalued. But in the meantime, this will be liquidated when these banks, these other funds that hold gold all around the world need to make margin calls, need liquidity. Metals get liquidated, guys, and so much of metals is paper traded. Looking at oil. Oil, again, respecting our fib layout, mean reversion trade happening here as well, we keep talking about. So oil is right now at 74,651. I mean, again, not interested in it. Remember, I've told you back since we lost this, not interested in it. Now, these are good opportunities for trades, okay? A lot of good technical opportunities here for trades. This is a daily time frame. Obviously had this massive double top print, but so much happening in the oil market with between OPEC plus cutting, between cap going on Russian oil, lots of things, lots of variables. Some people don't care about the variables, they're just trading a price action. That's okay. My niche is that I do both, right? I track the economics, I look at the forecast, I like to cycle trade, understand what's happening around, and I look at the technicals. So again, this is just extremely volatile, lots of trading opportunities in here, but this is still bearish for oil right now. This could change as the season progresses, but right now it's just pretty ugly, okay? Ugly. All right, guys, next video will be out Thursday. Check out that Tesla video. Remember the link below in the video description for the GANFAN video if you do decide to watch that, because lots of people ask questions about it. If you guys have any questions at all about joining the Discord, using one of our platforms that sponsor us, you can use that Telegram link as well in the video description to ask Lee some questions. He'll be happy to help you. I try to help all of you out in YouTube that do ask questions, but sometimes there's too many comments. I can't get to them all, but I do my best, as you guys know. Please do like and subscribe. Talk to you guys next video.